So before anything, like I said, like I used to say, before you start to look into any chart, before you start to analyze any price, any coin, forex, crypto, stock, any currency, first thing you need to do is you're looking at Bitcoin, for example. You're not looking at now everyone are trying to look at if it will go down seriously hard or even if it breaks out, what are the possible targets? So whenever you want to do that, you don't go below 4 3 to no, you don't go below 4 hours time frame because of the major pullback we should be expecting if there will be any pullback. So the first thing I always love doing is I would start from, first of all, for this video, I would start from the monthly time frame, gradually go down to weekly, to daily, and to the 4 hours time frame. So first of all, I cannot use the monthly time frame on Binance. I would have to use the monthly time frame on Bitstamp. So for this, I would go down to the monthly time frame. I explained this the previous video. I talked about this pennant flag pattern, this bullish pennant flag pattern, which has been forming for some time. I think since 2016 it has been forming. That is, we're looking at the pole. So sorry. So we're looking at the pole here, which actually started the move to the upside. So oh, from here we got this move to the upside, we got to this level, and it retraced back to this place. So when we got this move, that gave us the first move, which we're not actually sure of what is trying to form here, but we are sure of something is about to form. So if I remove this, let me quickly point out this. If I remove this, I have this levels which has been forming, which has formed in the previous chart here. If you look at it, we have this horizontal resistance around here, and we might actually get the same horizontal resistance around here. So we're looking for this target around here, which will actually make maybe like a cup and handle. Have one and two here. So you never can tell. This is a monthly chart, so don't expect move immediately. So that is the cup. That is the cup. The handle might take a while for the handle to be completed. So another thing again is this: you don't expect that move immediately. So if you look at this, for to calculate this, let's say from here when it got to this level of resistance, from here to this breakout, if you see it, it took this price how many days? 976 days to hold on to this level, get to the resistance, pull back down and find its way above it. So if we're looking at that again, I'm not saying we're going to stay that long. I'm not saying we're going to break out immediately. So if we're looking at a retest of that level, this is 970. I'm not going to calculate that, but you should not be too. It's a long-term stock, so you should not so quick about let it move fast to 100k to 40k. you just have to take your time, because once this move, it's a little difficult for you to get back that buy level. So so if we move back to the initial chart pattern I have been looking out for, I'm focusing on the rejection wicks, which are this, this, and probably this. And again, we're looking at this move again. And funny enough, I didn't actually see this happen. If I had seen this happen, I would have placed my order here, because we saw this. Let me expand this so that you guys can see it clearly. So we saw this here. We got that same move here. So who knows what, when this happened, you should have placed um the order around here, and no one knows when this will come back to this level again, and we never can tell if it will bounce and go back, or bounce and drop, or if this would get to this level and break out to the upside. So everything here has a psychological reason for this move, this respect, resistance here, here. So we have support here, here, here. So we have to support the two resistance, there is supports around here. So I still stand on my targets for the upside on the monthly time frame. You take the height of this, you drop it here. I don't want to drop that, it will look somehow ridiculous, but targets to the upside are looking good. And if we drop this, we have the same target around here, and we have this. So we have this touch, this touch, this touch again, and I don't know what will happen next. So we should be expecting not an immediate move. Like I said, this is a monthly candlestick until the end of this month before we get another candlestick open. So that is for that. For the monthly time frame, I still stick to my targets for the monthly time frame to the upside, but not immediately. Move to the weekly time frame, and I posted something on Twitter, was explaining the descending Belgian wedge. So I want to explain something here. I posted something like this. Yeah, I posted something like this. I posted something like this on my Twitter, and I'm going to explain that and explain why what you're seeing here is not really good at all. So first of all, um, we might actually get a breakout here if this continues to hold for too long like this. We might actually get a breakout here, but the breakout must be confirmed. If we are to get a new price to the upside, the breakout above this down sloping resistance must be confirmed. When I say confirmed, means this there is a down sloping resistance, and this down sloping resistance has a it's a psychological level where the bears are meant to control the market, and the bulls are scared that something might likely happen here. So this level, if the body of the currency closes above this level, I'm not talking about this rejection wicks, and I made it clear on my Twitter that if this will get a rejection wick, there might be a pullback. So if the body of the currency closes above this, then there is a violation of this down sloping resistance. I will show you guys an example here. If you look at here, before we had that big breakdown from this descending triangle, we got a lot of we got um this rejection week here. Okay, we got this, but before that happened, when we got to confirm this down sloping this descending triangle, I said the body of the candlestick must close below this. If it closes below this horizontal level, which has been a very strong level for a very long time. This body of the candlestick has violated that level and gives a signal for more push to the downside. So when we get the body of the candlestick closing below the support, which has been tested for several times, then move to the downside would be sure. The same thing we're having here. Until we have the body of the candlestick close above this down sloping resistance, then we will be sure of more upside. And take note of that. The this chart pattern is a bullish continuation chart pattern. Like I said, this is an impulse wave. This is a corrective wave. We might get an impulse wave, but before we get that, it doesn't mean that we're gonna get a straight move to the upside. Just like what we had here, got this move, consolidated, went up, came down back, got to this level, got rejected and pushed back. And so if we're getting this to the upside, we might get little retracement back. Depends on how the market is. But more high probability you're gonna get a push to the upside. So I still stand on my target for this. Normally the main target for this is the peak of the descending bottom wedge I have here. That is the major target if we're looking at this chart pattern. But before this, we need a valid breakout, a valid violation of this resistance trend line here. So there is something again I still need to show you guys apart from this descending bottom wedge, and it's still in line with even if we get it drop down to this level, it's still basically inside the descending bottom wedge, and then we have an inverted head and shoulder here. So if you can see here, we have one here, one here, and initially I was waiting for the right shoulder around here, but we got that move to the downside, which spoils the whole chart pattern, and now we're getting the same move again. So we have this here already, we have the left shoulder here, and like I said, whenever we have any level of support and resistance, always make sure you look into those level. Make sure you look into those level if it's on the if you're looking at the higher time frame and you have horizontal resistance and support on higher time frame. That most times those resistance and support on higher time frame price will find it difficult to break easily on higher time frame. Why? Because it's starting to get stronger with every time price goes back to that level. So we'll have the first touch here, came back down, the second touch, this is the third one. We never can tell what will happen here, but this is a weekly time frame. If we continue to get this move, what I would prefer is the body of the candlestick still the same. I want the body of the candlestick to close above every other resistance, either the down sloping or the horizontal resistance. I want the body of the candlestick to close above this. If we don't get that, we're gonna get a push to the downside. And for this, RSI is still looking to move higher. So until this closes, then we'll know what will happen next. So for the record, if price respect this level, we're looking at this, and we're looking at maybe this level again. So if we're looking at this level, what we're looking at here and we're looking at here. So it doesn't mean it should get to this level. price could just get to this level and reverse, but you never can tell what will happen. But take note of that. There are two things you need to keep an eye on if you're looking at this incompleted pattern. What are those things? The first thing is we want this to complete the right shoulder first, and even if it is completed, we still want the body of the candlestick to close above this. I'm still talking about the body of the candlestick. The body of the candlestick has more action in the market because if you don't have this body of the candlestick, that is why whenever you're learning, whenever you want to start learning analysis, they will tell you start from understanding how the body of the candlestick works. You see the red opens here and it closes here, but you get this rejection week. The market went down to this level, but at the end of the week, the bulls were strong enough not to allow this to close here, and they allowed it to close here, saying that they might likely take control of the market. So the same thing is applicable to this. This green is the bull, this is the bear. So if and only if the body of the candlestick closes above this, then there is high probability that the bulls are ready and fighting really hard to take control of the market to the upside. So until we get the body of the candlestick close above this down sloping resistance, horizontal resistance, the upside, then we're going to see the new price to the upside. So now again, we're going down to the daily time frame. Something I quickly want to show you guys on the daily time frame. So we're still looking at the same thing here. We got to this level down here, resistance here. So now we have a new resistance here. A new resistance has been created. So for price to make a new high, must close above this and must close above this. So again, this is the 4 hours time frame. Oh, sorry. This is the 4 hours time frame. This is 4 hours time frame, and what I'm seeing here, I'm seeing a bullish Gatly chart pattern, which I would go through the calculation using the Fibonacci extension and retracement ratio. If you guys don't know how I do it, so I want you guys to listen attentively. I will go through that very fast. I hope you guys will understand. And if you don't understand, I would make this video available on my YouTube. Go back, replay, and get it back again. So, like I said, whenever I see double top, this was seen here is a double top. Okay, this daily time frame. So daily and 4 hours, you can use it as well. So whenever I see something like this, we're seeing a double top. But if you look at the video I did on YouTube about the bullish Gatly, I said the double top must not be on the same level. When I say the same level, this is the top here, and this second top is not on the same level with this. So whenever you see something like this, look at where the move was coming from and where it stopped before going up. That is when you know you can actually look for price pushing down to around this level here before making new high. Okay, let's go through that again. So we have X, A, B, C, D. So we have the X leg, A leg, B leg, C leg, and the D leg before we get to move to the upside. So to do that, you use your Fibonacci retracement ratio. So we start from here. That is horizontal resistance here. So we start from here. So another thing again, you can either start from this resistance here, or you can start from here. But I will leave it at this for now. So the major thing is this: to calculate this, this is your x to a. X to a is for your calculation to be right, you have your x to a is a Fibonacci retracement from here. You drag it to the top of this list. So price must always come back to the 0.5 to the 0.618. But the body of the candlestick must not close below the 0.618. You can only get a rejection rate below the 0.618, close to 0.786. So from X to A, using your fib retracement, X to A, drop it. And when you drop it, look at where price is. Price must, the body of the candlestick must be between 0.5 down to 0.618. So we have our B. So B is calculated this form. Drop this here, drag it to the top. When you drag it to the top, look at where the body of the candlestick is. So we have our B here. Now from B, from want to get the C. This is X, A, B. We've gotten a B. Now to get our B, we've dragged our Fibonacci retracement from X to A, and our B is the body of the candlestick must not close below the 0.618. So now to get our C, we started from X to A. Now to get our C, we'll start from A to B. If you look at the previous way I positioned my fib retracement ratio, where the B is, which is the 0.618, that is where I'm dropping it. I'm not dropping it below this. So one will have this, which is where the body of the candlestick got to, not the rejection rate. So we'll have this. So the body of the candlestick must be between the 0.618 and halfway through the 0.786, but must not get to the top. Once it gets to the top, your calculations are not right. So that is our C. Our C is calculated by using the X, drop it down to the B. Then your C will be from 0.618 up to 0.786, halfway to 1. Then lastly, and the most important part, is our D, which is the major target to the downside. Now, when we wanted to get the B, we dropped our fib here up to A, and we got our B. To get the C, we dropped our fib here down to B, we got our C. Now to get the D, we'll drop our fib here and drag it to the upside to get our D. Now the D ratio would now be the 3 extension ratios. Now what are those 3 extension ratios? We have the 1.272 down to the 1.618. So this is what we have here. So from X to A to B, B to C, C to D. So you look at it very well. These are the ratios. See, the ratios I just calculated now, these are the whole ratios. This is the extension ratio which completed this move. This is 0.631, which is between the 0 point from here to the top. You see it from here. You can see it's 0.31631, which is here. And again, that's why I said if you don't use your fib, you would not get this right. So now what I am looking at is a drop down to this level, And for this to be certain, we need price to get to this level of support. This level of support. So let me move this aside. This level of support. So take note of this. We'll have a double top here. Have a double top here. So what I want to see, if this is being respected, I want a drop back to this level, and we'll have to get some consolidation, rejection, and maybe a drop to this level again. So for now, we have a lot of levels of support to the downside. We have this here, which you can see this rejection week around here, and again we'll have this level again. Why I'm using this level is because the body of the candlestick have not closed below this, so we might get a pause around here when price is moving to the downside. So we should expect that when price is moving to the downside. And majorly, I said always make sure you concentrate on the higher time frame. And if this move doesn't go down and we get a move to the upside, take note of this. Only when the body of the candlestick closes above this down sloping resistance, if we don't get the body of the candlestick close above this, which is around 10k, okay, which is we're looking at around let's say 200 and above. If we don't get the body of the candlestick gives us a new price, we're not going to get a new high here. We're not going to get a new high, and take note of that. We might get rejection week to the upside and a pullback down inside, but you have to wait for proper confirmation to the upside before you go in fully. So for now, we're going to get a little pullback. I think this level is still in line with the inverted head and shoulder I'm looking at, which is this level of support and resistance here. So we're looking at this. We're also looking at this. So if we get this move to this level, I think it's still okay. But let's keep an eye on this level. Very important. You never can tell. Today's Friday. We're moving to Saturday, Sunday, and the market is always dull. So much trading, and basically Monday we're always getting a big dump sometimes in the market. So just be careful about what you do around here. Get that move to the downside. So again, you want to know how I did this, you can watch it later on my YouTube, so you understand what and how I did this calculation. So for now, we want this to close this daily time frame. If this closes, we're seeing this move around here. This is support, resistance before now turning to support. So if this closes this way, I think we're still gonna get more move before we get the downside. But if this closes above this, then we're gonna see more new prices coming into the market. So but for now, we're gonna get push. Let's push down to the downside. And I think that's all I'm looking at. BTC USD back to the Binance. So that is what I'm looking at on this for now. So I want to go to ETH USD, and I'm going to use Binance for that. So this is bad. I don't know what BTC would do, but if this closes this way, we're getting a bearish engulfing candlestick. Have someone Is that not a bearish engulfing? Yes, that is. But I need to explain this. Let me explain this. A lot of you would see a bearish engulfing candlestick, and something there's something you guys need to understand before that candlestick would be confirmed that yes, we're pushing down. I would explain that. Let me explain that. I think let me look for okay. Trying to see if I can get okay. Let me explain it using this. Now to trade this is a daily time frame, and what you're seeing here is a bearish engulfing candlestick. If you don't know what it is, it means when they say something has engulfed another thing entirely, it means this candlestick is small, you see here, and even at that, this is a bearish reversal candlestick chart pattern. So okay, let's leave that for now. So this candlestick you're seeing here, the next candlestick, which is this, which is yet to close, is bigger than this. So if you remove the size of this from this, you'll see it still have another bigger size, which means you can remove two times of this from this. So this has actually engulfed this and is telling you the bulls are becoming weak and the bears are trying to take control of the market. And again, what I explained in BTC USD, I explained the same thing. This down sloping resistance. You get this. Okay, if I put it down to this, you get this rejection again. Rejection week, pull back now, and we're right at that level again. So until we get this body of the candlestick violate this psychological resistance to the downside, then we're going to see a move to the upside. But for now, I think, and what I think we're going to see is a retest of this level, a retest of this level. First of all, I want this to close. And after this have closed, that is not 100% guarantee we're going to push down. What I want to see again is this. I have always tried this, and most times it doesn't work. I've always seen candlestick close like this, and I expect it to push down. Next thing you see it, it's continuing to move up. A bearish or a bullish engulfing candlestick. First of all, let me look at the bearish first. Bearish engulfing candlestick. When you have this, the next candlestick, I want it to close way below this rejection week. When it closes that way, then we'll get a push to the downside. Just like this. You see, it did not close below this. So just because it did not close below this, we got a pullback to the upside. So now for this, once this closes this way, a little bit, let's say around here, if the next candlestick closes a little bit below this rejection, then we're gonna get a push to the downside. And take note of this. I'm still gonna continue talking about this down sloping resistance, which has been holding since April. And let me go back. Okay, let me use. I think it's time. Is it Bitfinex has the oldest chart on ETH. This is the weekly time frame. This is the weekly time frame. We're still seeing the same thing. Down sloping from here. Down sloping. And what are the levels of resistance around here? Have this. You can see that perfect resistance here. We got to this place to pull back again. So we're seeing this again. Now look at what I explained here. You see what I explained here. This is a bearish engulfing candlestick. Bearish engulfing candlestick. And we got this. move to the upside. The second candlestick did not close below it. Look at this. This did not close below it, but this other one closed below this. And we got to push to the downside, even if we have this rejection to the upside. We'll continue to push down from, even if you had entered from here, from 179. You see the price still moved down to this level, to around 116. So whenever you want to trade, look at it again here. We had this bearish engulfing candlestick. Did you see where the next candlestick closed? It closed way below this rejection week, and we got this push to the downside. So if you had entered around here, which is the rejection week below the red candlestick, you should even make more profit to the downside. So just make sure you look at the bottom of the rejection week of that engulfing candlestick you are trying to trade. So again, the same thing is happening here. Let me look at the monthly chart. If okay, so this is a symmetric triangle chart pattern. Forget about this rejection week. If you don't need to pay attention to this rejection week at all, we're using the close. You can use the close here. You can use the close to above. But this is a symmetric triangle, and one thing about symmetric triangle is you have to wait for it to close either the up or the downside. So let's go back to this. I would give you the targets to the downside of this. So first of all, um we're looking at here. We're looking at this body close. Forget about this rejection week. We're looking at this body close, and from here we can now start pointing out the level of resistance from here. You can see how perfect this is here, here, here. So daily time frame should expand that a little bit, and again here again. So just keep an eye on 1, 2, 3, and it will only be valid. These targets to the downside will only be valid when this closes like this, and the next candlestick closes below the rejection week. We're gonna get a test of this, and majorly cryptocurrency, BTC, and ETH. I think if you want to buy for long term, I think you should start looking at what perfect level you should be buying at, because I think it's not going to stay too long this way before price will continue to move high and high. So ETH has been below 200 for some time now, and I think it's still below 200. It's the perfect price to buy and hold for long term, though not a financial advice. So these are the levels I'm looking out for on ETH and BTC. So I think for now, I think on Sunday rather, I would be doing a live section and we'll be looking at Litecoin, Link, XTZ, I would list it out. On Monday, I want to put out a lot of targets, the downside which you can buy and hold for price move back up. So if you have any question, please, I would only entertain 2 questions before I call it a day, and make sure I get the video ready and post it on my YouTube. So while I wait for that question, today is Friday and the forms are open again. If you want to join the VIP group, you can chat me up, or you can check the pin message on the Signal group. If you want to join the Signal group, you can also chat me up on Twitter or on Telegram. Just let me know. Just DM me and we'll talk about it. So I'm still waiting for the question, and I think there is no question. So if you have any question after this video, please do well to ask me later on Twitter, on Telegram, on WhatsApp. Feel free to send me a message. And tomorrow again, last week we started started a new topic on the TA class. We started talking about the Ichimoku. We're going to move to Ichimoku 102. We're still talking about the metrics. And another thing again, if you had bought this, if you had bought this, let me remove this. So if you had bought this move when price dropped to this level, we got this horizontal support around here for the body of the candlestick. If you had bought this to the upside, you should have made some gain. And if you're looking at it, I think we're about to get a bearish crossing around here, but future cloud is bullish. We might get a drop to this downside, and when that time is right, I would explain better. But for now, the Tenkin and the Kijun are going totally flat, meaning no much momentum in the market, nothing really good happening, no big move in the market. So I have one question. How do you manage trades? Assuming the BTC pair are dropping, but altcoin charts looking good. It depends on how you want to do it. If I only what I only advise is those that are holding Bitcoin for long term. If you're holding Bitcoin for long term, the only thing you do with BTC trades is to increase the BTC you're holding. So I would not personally advise you to buy Bitcoin and start trading, or else if you're holding for long term, then you can start increasing your BTC value. But once BTC start going up, you don't need to bother yourself with where should I buy, where should I sell. You should know you have it already, and you're increasing the numbers of BTC you have. Maybe you're having like 0.5, you continue to trade altcoin now. You are increasing to 0.6, 0.7, 0.8. You see, even if the price is going down, you are accumulating that BTC for long term, and in the long run, the value in USD will change, and you see that you're doing a profit. So I think that is the only question I have for today. So thanks guys for joining the live section, and if you have any question, please do well to ask me on Telegram. Let's see if I have one more question. Okay, no question, no other question here. So guys, it's nice doing this video. Join me on Sunday again. I will make sure I look at a lot of altcoins, big cap. I don't want to look at all this small cap, focusing on all this big cap reply back to the level instead of dropping in the chats. So if you want to ask a lot of questions. So guys, happy trading, and I will make this video available very soon. Take good care of yourself, stay at home, and happy trading.